So Vijay, my colleague in New York, invited me to talk a bit. I've done a lot of reporting on ExxonMobil recently. It was our cover of last week's issue, to talk a bit about the limits of green investment as I've observed them in my reporting. So if you look at the green investment landscape as a whole, it's an incredibly dynamic time where you have individuals who might be concerned about political inertia on climate who are able to take action in their own investment decisions through low carbon indices and ESG funds. On the level of big institutional investors who have been concerned about sustainability for some time, they've become much more organized in the ways that they're exerting pressure on companies. So you have investors with 32 trillion in assets under management who have joined together to create this group called Climate Action 100 Plus. Some of you in the room may be familiar with it. And a big focus of this activity have been oil and gas companies. And if you look across the landscape at oil and gas companies, they seem to have changed quite a bit. So the big executives, the chief executives of the large majors all support the Paris Climate Agreement. Particularly in Europe, you see companies investing not just in oil and gas, but in wind projects and solar projects, investing in utilities. Green investors have been very active at shareholder meetings. So the number of climate-related resolutions at annual meetings for oil and gas companies doubled between 2014 and 2018. And most notably, they've had some success. So in 2017, a majority of ExxonMobil's shareholders voted to require the company to make more disclosures around the risks from climate change. Just in the past few weeks, BP made its own announcement on climate disclosures. And in December, most importantly, Shell said that it would have the ambition of reducing its carbon emissions by half by 2050, but even more notable, on short-term basis, set hard targets to lowering its emissions, and it would tie executive pay to those targets. So this is a really big deal. It's very important. But there are real limits to what this can achieve if you look a bit more closely. So oil and gas companies continue to invest the vast majority of their capital expenditures on oil and gas. An examination by the Carbon Disclosure Project, which is out of the UK, published in November, found that about 1.3% of the industry's investments in CapEx are in low carbon technologies. And if you look at what the capital expenditure plans are for the majors going forward, they all plan to invest to differing degrees in increasing oil and gas production. So ExxonMobil is the most aggressive. By 2025, it wants oil and gas production to be 25% higher than it was in 2017. But all of the companies are ramping up oil and gas production. And the reason for this is not that complicated, which is that oil and gas demand is rising. So you have population growth and rising incomes around the world are incredibly powerful factors in pushing oil and gas demand up. Electric cars are moving forward. The big three in Detroit have plans to expand their fleet of electric vehicles. But even in a pretty optimistic scenario, in 2030, about 15% of cars on the road would be electric. That doesn't account for trucks and airplanes and all of these different types of transport that are harder to move to electric power. So faced with rising and healthy oil demand, is it that surprising that oil and gas companies, which have the expertise, capital, and duty to their shareholders to deliver returns, that they would invest to meet that demand? This isn't that surprising. We can have a debate about whether they should be blamed for that. I don't think necessarily they should. They're companies, and there is demand for the products that they produce. And the question is whether green investors have a role to play in shifting that course. And I'd argue that they can't quickly enough. So the IPCC says that it's much harder to limit carbon emissions after 2030. So the next decade is really critical for how capital is invested, whether it's invested in sources of fossil fuel production or in renewable sources. And big oil and gas companies, on their own, each of them can make the case for why they should be the ones to produce greater oil and gas going forward. So even in a really great scenario where we limit the rise in global temperatures to 1.5 degrees Celsius, there still will be the need for some investment in oil and gas. And each company can say, we should be the ones. I'm ExxonMobil. I've spent 137 years doing this. I have the expertise. I should be the one to produce more and more oil and gas. You have a huge collective action problem where if every company followed that logic, we'd all be in a really tough spot on climate change. So green investors have made a lot of progress with these companies. If you look more closely at what companies have committed to under pressure from investors, it's not actually that aggressive. So Shell is way beyond what any other company in the space is doing. It has, as I said, these targets for its emissions, not just from its operations, but from the products that it sells, which is really a big deal that green investors were able to force Shell to do this, but that its emissions would decline over time. If you look at that announcement, it's not actually a measure of absolute emissions. It's a measure of carbon intensity. So if Shell increases production of energy from solar renewables, it also can increase production of oil and gas. And that's just plainly incompatible with the Paris Climate Agreement. The other companies continue to lobby. They support the Paris Climate Agreement, but they continue to lobby against rules that would limit emissions. So even if every company were to follow Shell's lead, which is the most aggressive in the industry, you still actually wouldn't be moving that quickly towards reducing carbon emissions over time. And so I would argue that the oil and gas industry is a very good illustration of why government action is necessary to tackle that collective action problem that I described. And that green investors have a hugely important role to play in continuing to pressure companies to diversify their business, because the more companies can seem to be at least hedging against the possibility of regulation, the more likely it is that that regulation will come into force. And they can also exert a lot of pressure on companies' lobbying practices. So one of the less talked about components of the Shell announcement in December was that it would reevaluate its membership in trade associations. And their companies have continued, whether it's individually or often through these trade groups, lobbied against measures to reduce emissions. So green investors have a role to play in essentially shaming companies into changing how it is that they lobby. ExxonMobil announced around the release of the IPCC report in October that it would spend $1 million towards advocating for the carbon tax that has been proposed in Washington, which was, again, an important announcement, a big shift for a company like ExxonMobil. But actually, $1 million, it's about 0.005% of 1 year's profit. It's something, I can't remember the exact figure, but it's definitely less than a tenth of its annual lobbying spending, and that 1 million is spread over 2 years. So green investors have a role to play in saying, if you really support a carbon tax, put the full weight of ExxonMobil behind it, put more lobbying money behind it. So in my own reporting, what I've observed is not that green investors don't have a role to play, they certainly do, but we need to be very clear-eyed about what green investors can and cannot achieve.
Charlotte, if they were to commit to, say, hard limits of some sort on the quantity of oil and gas that they produce or sell, if there weren't the alternatives in place already, all we'd see is the price of these things go up an awful lot. So presumably that's another collective action problem to ramp up the alternatives fast enough anyway.
Right, so we have someone from Ørsted who's going to be here later, and Ørsted used to be called Dong, the Danish company, and it made a very interesting decision to focus its attention on renewables rather than oil and gas, and I'm sure that he'll speak to that. But on an industry-wide basis, it's just not going to happen. Mm-hmm. And you can kind of contort yourself in all these ways through climate disclosures in your financial statements, et cetera, to show that as a company that you take climate change seriously. But it just would be far simpler if you could have a clear limit set by government and then companies could compete and respond to those limits as they see fit. Now, I am fully aware of the fact that part of why green investors are active is because politicians haven't gotten their act together. So be that as it is. But there are proposals now, whether it's the Green New Deal or the Baker-Schultz carbon tax plan in Washington, that you can agree with them or not, but there's growing pressure for the parties to come up with some kind of real answer here. Climate change shouldn't be a partisan issue, and green investors should, I would argue, really be focused on lobbying if they want to be most effective. But I'm willing to have everyone in the room disagree with me, and we can talk about it over lunch.